We are watching the ticker for Antelope Enterprise Holdings Ltd, symbol AEHL, which is currently trading at exactly $2.08 USD, registering a massive intraday gain of 87 cents or approximately 72.17% in the green at this very second. This is not a drill, and this is not a glitch in the matrix. This is the kind of raw, unfiltered volatility that defines the aggressive edge of the microcap market. When you see a stock move over 70% in a single trading session, the immediate expectation from the broader market is often dismissal, the assumption that this is just another pump and dump, a fleeting moment of irrational exuberance driven by chat room hype or a technical short squeeze with no fundamental backing. The average investor, perhaps someone casually browsing their Fidelity mobile app or checking their Schwab Intelligent portfolios, might glance at this percentage gainer and scroll past, assuming it is too risky or simply nonsense. However, the reality of what is happening with Antelope Enterprise Holdings today is significantly more complex and points to a calculated structural pivot that forces us to look closer. We are not just seeing a random spike, we are seeing the market aggressively repricing a company that has fundamentally altered its reason for existing. The tension here is between the expectation of a dying ceramic tile manufacturer and the reality of a company that has aggressively restructured into the high-octane sectors of live streaming commerce and, crucially, a strategic Bitcoin acquisition plan. The volume flowing into AEHL today is nothing short of torrential. We are seeing share turnover that dwarfs the company's typical daily average, indicating that this is not just existing shareholders adjusting positions, but a flood of new liquidity entering the fray. On platforms like Robinhood Stock Trading and SoFi Invest, this ticker is likely lighting up the top movers lists, acting as a beacon for retail traders who thrive on momentum. When a stock at this price point, around the $2 mark, starts moving with this velocity, it creates a self-fulfilling prophecy of liquidity. Day traders using Interactive Brokers trading platforms, who generally look for volatility and tight spreads, are likely hammering the bid and ask, trying to scalp cents off the volatility, while longer-term speculators are buying into the Bitcoin proxy narrative. It is crucial to understand the psychology at play here. Investors who missed out on the early days of Tesla stock or the meteoric rise of Nvidia stock are constantly hunting for the next asymmetrical trade, the asset that can multiply in value in a short period of time. AEHL, with its low float and high news velocity, fits that profile perfectly today. The price action suggests that the market is waking up to the company's recent strategic maneuvers, specifically its financing agreements and partnerships aimed at acquiring digital assets. This is no longer just a building materials company, it is transforming into a holding company with exposure to the most volatile asset class on the planet. Let's talk about the specific mechanics driving this price action right now. At $2.08, the stock has cleared several key psychological resistance levels. It likely smashed through the $1.50 and $1.80 walls earlier in the session, forcing short sellers, those who bet against the stock, to cover their positions. When you are short a stock like AEHL on a standard individual brokerage account and it moves 72% against you in hours, your risk management rules or your broker's margin call algorithms force you to buy the stock back to close a position. This buying pressure adds fuel to the fire, creating a vertical price trajectory that defies standard technical analysis. This is why you see the chart looking like a vertical line. It is a cascade of buy orders triggering buy orders. For those of you engaging in self-investing or using investing sites to track this, you will notice that the bid-ask spread is likely widening. Market makers are struggling to price the risk fast enough, leading to gaps in the order book. If you are placing a market order on a Fidelity trading platform or the Robinhood app right now, you might get filled at a price significantly different from the last quoted price because the price is moving faster than the data feed can update for retail users. This is the danger and the thrill of trading a stock in the midst of a 70% repricing event. To understand why this is sustainable, or at least why the market thinks it might be, we have to look at the business model transition. Antelope Enterprise Holdings was historically known for manufacturing ceramic tiles in China. That is a capital-intensive, low-margin, slow-growth industry tied to the Chinese real estate market, which has been under immense pressure. If the company were still solely a tile manufacturer, this stock price movement would be entirely unjustified. However, the reality is that AEHL has pivoted. They launched Kylin Cloud, a subsidiary focused on live streaming e-commerce in China. This is a massive sector. In Asia, live streaming is not just entertainment, it is a primary sales channel for everything from lipstick to luxury cars. By positioning themselves as a service provider and operator in this space, they tapped into a revenue stream that is digital, scalable, and high growth. But the real accelerant, the reason we are likely seeing the 72% move today, is the treasury strategy angle. Similar to other companies that have adopted a Bitcoin standard for their balance sheet, AEHL has made moves to acquire Bitcoin as a strategic asset. In a market environment where fiat currency is constantly being debased and investors are looking for hard assets, a micro-cap company announcing a dedicated strategy to hold Bitcoin acts as a leveraged play on the cryptocurrency itself. If Bitcoin goes up 1%, the equity of a small company holding Bitcoin often goes up 5 or 10% due to the speculative premium. This is what investors are buying today. They are not buying tiles, they are buying a lottery ticket on the execution of a digital asset strategy. Now consider the broader landscape of online investment and how different demographics are approaching this. A conservative investor using Fidelity Wealth Management or Fidelity Mutual Funds is likely nowhere near this stock. Their advisors are telling them to stick to the S&P 500 or diversified bond portfolios. This stock does not fit the criteria for a Schwab Intelligent Portfolio, which relies on algorithmically balancing risk and reward based on historical volatility. AEHL is an outlier. It attracts the aggressive capital, the money that sits in a Robinhood cash management account waiting for a signal. It appeals to the trader who uses the SoFi trading platform to take a small percentage of their portfolio and aim for a home run. This divergence in investor base is important because it dictates how the stock trades. Institutional investors, the pension funds and endowments, move slowly. They buy over weeks or months. The crowd driving AEHL up 72% today moves instantly. They coordinate on social media, they react to headlines in seconds, and they can reverse direction just as quickly. This makes the stock incredibly fragile, but also incredibly potent on the upside. If you are using Interactive Broker's account, you can see the depth of the market, the Level 2 data. You would likely see walls of sell orders at $2.10 and $2.20, representing profit-taking from traders who bought earlier at $1.30 or $1.50. The fact that the price is holding above $2 suggests that for every seller taking profit, there is a buyer stepping in, believing the run is not over. We must also discuss the macro environment that allows a move like this to happen. We are in a market cycle where liquidity is hunting for yield. When the major indices like the NASDAQ or the S&P 500 are chopping sideways or grinding slowly higher, traders get bored. They look for beta, assets that move more than the market. AEHL is providing that beta in spades today. Furthermore, the global acceptance of cryptocurrency as a legitimate asset class on corporate balance sheets has legitimized what AEHL is doing. A few years ago, a tile company buying Bitcoin would have been laughed out of the boardroom. Today, it is viewed as a visionary attempt to unlock shareholder value. This shift in perception is what allows the stock to maintain these higher levels. However, one must remain grounded. The company still has to execute. Promoting a live streaming business and buying Bitcoin are great headlines, but they require cash. The company needs to raise capital to fund these purchases, which often leads to dilution. This is the sword of Damocles hanging over every microcap surge. Will they use this high stock price to sell more shares? If they do, the supply of stock increases and the price could crash back down. This is the risk that sophisticated traders on Fidelity trading platforms are calculating right now. They are looking at the company's SEC filings, checking for shelf offerings or warrants that could be exercised. I want you to take a moment and think about your own exposure to this kind of volatility. It is easy to watch from the sidelines, but being in the trade is a different animal. Comment below how many shares of Antelope Enterprise Holdings Ltd. you currently hold, or if you are just watching this volatility from the sidelines today. It is fascinating to see the distribution of retail holdings in moments like this. Continuing with the analysis, let's look at the live streaming aspect of the business again, because it is often overshadowed by the crypto narrative. The Kylin Cloud subsidiary is operating in a fiercely competitive market. China's e-commerce sector is dominated by giants like Alibaba and JD.com, and platforms like Douyin, TikTok, are the battlegrounds. For a smaller player like AEHL to succeed, they need to find a niche, perhaps focusing on specific verticals or second-tier cities. The revenue growth